Well, we've left 5 shorter topics for this final section in the spirit of stirring the pot a bit. First, Swapnil alluded to the opportunity for semiconductors. How do you see that playing out in Southeast Asia?
Swapnil makes a very insightful point. If you look at the journey of the semiconductor industry over the past 20 years, there have been 2 things happening in parallel. One a little bit more visible and one a little bit more behind the scenes. Very visibly, the productivity and capability of semiconductors continues to follow Moore's law. It's breathtakingly impressive to see the ongoing miniaturization of semiconductors and their ongoing efficiency and productivity. A little bit more subtle is the global shift in where semiconductors are being manufactured and where they're being exported from. Take a look at the right-hand side of this chart. It's no surprise that China has become a very successful participant in the global semi-industry. In fact, over the past roughly 20 years, their exports have grown at 16% annually. They are today the world's largest exporter of semiconductors on a global basis. But what's a little bit less known is that if you were to add up all of the countries of Southeast Asia together, they would collectively be the world's 2nd largest exporter of semiconductors. Now, these may not be the absolutely nifty, latest cutting-edge stuff that TSMC is making in Taipei, but they're very meaningful in aggregate dollar terms, and they've grown, whereas many other parts of the world have actually seen their exports shrink, like the US. Malaysia, Singapore, Vietnam, Thailand, Philippines, in particular, have been important growth areas for semiconductors, and we especially want to call out Vietnam at 41% annually over 20 years. That is one of the single largest growth rates and single biggest success stories in the world for semiconductors. The commercial ties between Vietnam and the rest of North and East Asia, predecessors of Vietnam in the semiconductor industry, are deepening and growing in a very, very interesting way. Now, here's the interesting dilemma from an investor perspective. Although Southeast Asia is the 2nd largest aggregate exporter of semiconductors, there's only about 30 plus semiconductor companies that are publicly traded in Southeast Asia. The vast majority of the world's public semi-companies are in Taiwan, Korea, China, the US, and Japan. So what Southeast Asia has sort of become is in effect, the factory for these 5 countries here in the region. And the publicly traded companies and the opcos and holdcos, if you will, are actually sitting overseas. The biggest question that we have in our mind is, will we see the genesis, will we see the creation of indigenously headquartered companies here in Southeast Asia to capitalize on the dramatic growth of this industry and the geopolitical realignments? To that end, we take a cue from Korea. Now, this chart has a little bit of survivorship bias, but nonetheless, it makes an important point. If you look at every public company in Korea today and categorize them by industry, and you look at the date that they went public, again, leaving out companies that have liquidated or been bought over time, delisted, textiles, followed by auto, followed by electronics in terms of the number of public companies Korea has produced. We think that every economy of a certain size that has a thriving textile industry has the right to play in getting into automobile exports, and therefore then has the right to play in terms of getting into semiconductors and electronics. You saw that happening certainly in America, certainly in Japan, certainly in Korea, certainly in China. It happened 2 out of 3 in Taiwan, where there was a textile industry and now there's a thriving semiconductor industry, as Swapnil shared. Isn't an auto industry per se, and we think that the next one to keep a very close eye again is Vietnam, and perhaps Malaysia and a few others in Southeast Asia. Something to keep a close eye on.
When Oliver talked about talent dynamics and graduates from the top universities in China, India, and Korea, it was interesting that you didn't mention talents coming in from the US and Australia, which are so well known for their universities.
This is a great question, Nancy. You're absolutely right. One of the things that we have started to track is maybe a partial answer to your question. We're really curious to find data on how many students from Asia and Southeast Asia specifically are going to the US and going to Australia for higher education and then coming back, what's often called the sea turtles. And we would summarize our view in the next 10 years in a single statement. Keep an eye on the Vietnamese sea turtles. Why do we say that? Well, If you look at the number of students that go to America for higher education, college and beyond, masters and whatnot, it's been very interesting to see the trends. China has sent an absolutely enormous number of students to America, as has India, as has, in relative terms, Southeast Asia. But interestingly, there are waves. China's wave, we think, has likely peaked in 2020. India's wave hasn't peaked yet. Southeast Asia's wave, TBD, but there was a temporary peak in 2018. Korea peaked many years ago. Taiwan, well in the 1990s, and Japan in 2000. But if we unpackage Southeast Asia into its constituent countries, the Vietnamese students going from Vietnam to America have grown at a breathtaking rate. This chart, like the previous one, is on a logarithmic y-axis. You'd see even more dramatic rise on a linear axis. And we don't think that the Vietnamese students have yet peaked going to America. The dip you see over the last few years is largely COVID and travel related. We would very much want to watch this space, and I think a new generation of founders will increasingly be coming back to Southeast Asia from Vietnam, but with an American education. And by the way, many folks that live in Southeast Asia will say, America's nice, but actually Australia is closer and a bit more affordable in some cases. That's why we look at the Australian data as well. You see the data here for most of Asia in terms of China, India, Southeast Asia, and so on and so forth. And again, what's very interesting to see is that Vietnam is the single largest contributor of students going to Australia for higher education as well. And we think that trend will only continue over the years to come.
One of the most interesting takeaways from the talent mapping was that massive surge in hiring by Bytedance. They've become the new B in the BAT acronym.
You're very right, Nancy. BAT, which we think originated sometime in the mid-2010s, at least that's the first reference we can find for it online, used to be Baidu, Alibaba, Tencent, and now, of course, people think that the B ought to be Bytedance. One of the things that we would likewise emphasize, just like we want to watch the Vietnamese sea turtles, we want to keep an eye on the Bytedance alumni in Southeast Asia for two reasons. Number one, there are going to be a lot of them. There are currently 10,000 Bytedance employees in Southeast Asia, according to LinkedIn. Only about 28% of them have left. Now, maybe it's a bit apples to oranges because maybe there were fewer people when those people left, but in general, there's a lot more alumni still to come out of Bytedance in Southeast Asia the next couple of years. But the second reason is also very interesting. They've come from some really interesting alma maters before Bytedance. Sea, Grab, Lazada, software companies, global tech majors. They have entered Bytedance with a terrific skill set. They will continue to develop a terrific skill set, including in e-commerce, where Bytedance has done a fantastic job in Southeast Asian e-commerce. And we can't wait to see what the Bytedance alums do over the next 5 or 10 years. We think it'll actually end up becoming one of the larger clusters of founders, just like the Zalora Mafia we talked about earlier in today's film.
We spent a lot of time talking about IPOs, but for many private equity firms around the world, strategic sales make up much of their liquidity. How will that play out in Southeast Asia in the next decade?
You're absolutely right that we love taking companies public, in part because when you aim for an IPO, it sets up a very high bar in terms of governance and systems, internal rigor. But of course, as one of our LPs likes to say, the most convincing SIM, confidential information memo for a company, is often its S1 or F1 filing with the SEC. So there's many opportunities over the coming years for companies in our portfolio and others to consider being part of a larger company. The important question is not whether people want to sell. The important question is whether people want to buy. And if you think about the journey of companies getting sold in Southeast Asia, it's taken a very interesting turn over the last 20 or so odd years. Take a look at this chart for a second. What you're looking at on the y-axis is the mix of how much M&A volume within emerging Asia is in China, Korea, South Asia, Southeast Asia, or Taiwan. And on the x-axis, you see 1998 until 2012. And this includes not just cross-border M&A, but within border M&A. A Southeast Asian company buying another Southeast Asian company, or a Korean company buying a company in China. All situations. And what you see is that over the this period of time, China was about 32% of the mix by dollars, and Southeast Asia was about 25% of the mix. And take this as sort of more directional. The data set isn't perfect, certainly not going this far back. But look what a difference the last roughly decade made. China grew to well over 50%, and Southeast Asia fell to 12%. You can see the incredible strategic importance of China and the priority that China escalated to over the past 10 years, and perhaps the receding of Southeast Asia as a strategic priority over this period of time. We are convinced that these two dotted lines will compress closer to each other. They may not flip over each other because China's economy is massive and domestic M&A is very, very vibrant. But these two dotted lines will certainly squeeze closer together again as they did from '98 to 2012. Now, this includes domestic to domestic as well as foreign to domestic target. What if we just look at cross-border M&A? That's something worth thinking a little bit about, because cross-border M&A is when a buyer somewhere else in the world decides that they love a certain region and would love to partner with and do business with an existing team, with an existing franchise, an existing distribution network, and to put two and two together to make something more than four. If you look at 1998 to 2012, Southeast Asia was actually more than China in terms of inbound cross-border M&A. M&A into China, into Korea, into South Asia, into Southeast Asia and blue, and into Taiwan. However, in the 10 years that continued, it flipped. China became higher and Southeast Asia became lower. Again, we think that these two curves will move closer together again, and there is every possibility, given the new geopolitical realities, that Southeast Asia becomes one of the most important parts of Asia for global companies to buy product. If you will, buy existing companies on the ground with networks, relationship, Category 3 bonsai network effects that are regional and hard to replicate. We would again say, watch this space. We think it's going to be a very interesting time for investors in local South Asian companies to seek liquidity by selling to global companies desirous of market access here in Southeast Asia in the next decade.
From time to time, one comes across articles talking about how many major global companies were actually founded during times of economic crisis. GE was founded around the time of the Panic of 1893, and GM right after the Panic of 1907. Disney was founded in the years before the Great Depression, and Microsoft in 1975, in the midst of the 1970s stagflation.
It's really true. You come across these articles all the time about how companies formed during years of challenge and hardship often prospered. It's sort of like the old joke that, when we were young, we ate dirt, and you youngins have it all easy. And there's some truth to that. Things were harder in the past. One of the things that we stumbled upon is something that is so curious that we can't help but want to share it and talk about it a little bit. And we were genuinely surprised to see the behavior you're about to see. If you look at the number of American students, and by the way, we'll show Southeast Asia in a second, that graduated with a degree in computer science, it's been upwards and to the right, but part of that's driven by population. And the number of students that go to college. If you simply look at, though, the percentage of graduates of U.S. universities that graduated with a degree in computer science, it has basically oscillated almost like a trigonometric sine wave on a roughly 17-year cycle. Now, the cycle begins in the 1970s because computer science wasn't even a discipline until then. That's when universities started actually formalizing how to teach people how to program and learn computer science. But you see peaks in the 1980s, another peak in the early 2000s, and another peak today. We were really curious. What makes a major for undergraduates so cyclical on such a predictable, almost eerily cyclical basis? Well, it turns out that if you were to overlay the chart of graduates by graduation year with something which probably requires a little bit of explanation, there's a very strong fit. Imagine that you're driving up in your family station wagon to your undergraduate dormitory. You're excited, you're pumped, you haven't chosen your major yet. And as you're sitting in the back of the car, mom and dad are talking all about how well their portfolio has done. They owned iOmega in the 1990s or Yahoo. Now more recently they owned Snowflake. Perhaps in the 1980s they owned Apple or Microsoft or whatever was public back then, Intel. You might be influenced by what you heard around you. You might be influenced by the perception of value creation and financial stability for your family. It turns out that if you look at the cycle of graduating college students in America, by major for computer science and overlay that with how the NASDAQ had done in the years leading up to when you were driving up to school to pick your first year major, there's a wonderful hand-in-glove fit. It's not a perfect correlation, but it's pretty close. And again, you have to shift it by 4 years because computer science is a prerequisite heavy major. You can't make up your mind to be a computer scientist the last week of your final year of school. It gets planned early on. You lock yourselves in. Turns out the same thing is broadly true in Southeast Asia as well. We found data for the National University of Singapore, one of the flagship universities of our region, and by and large it tends to follow a roughly analogous pattern. This is super interesting for us. It lets us do two things. It lets us have a view on where that cycle might take us for the next 17 years, but I want to go back to Nancy, your wonderful point about General Motors and GE and even Disney, which was founded 6 years before the 1929 crash. Is there something unique about the companies that get founded when the CS majors are at an all-time high or at an all-time low? To test that hypothesis, we found a list of all of the world's companies in tech that have at least a $20 billion market cap. We stripped out the telcos, many of whom were founded many years ago, often out of state monopolies on a global basis, and instead focused on the companies that were founded in 1971 or later. And what you find is fascinating. A remarkable number of today's $20 billion plus publicly traded global technology companies were founded when computer science graduates were in their own little recession. Not an economic recession, not an employment recession per se, although there might be some linkages. A computer science graduate recession. Take a look at the data. 64% of all of those companies founded since 1971 or so, with a $20 billion value or greater today, were founded during what we call the contrarian trough, when people weren't getting as many degrees in computer science. Only 17% were in that period stretching up to and including the peak. And if you look at it by value, and not just by the number, although they're all very valuable companies, it's even more pronounced. 78% were founded during contrarian troughs, which means we can combine both of these ideas. If there really is a 17-year cycle, which is propagated by the cycle of the capital markets, in fact, propagated by tech bubbles to a certain extent, then we could imagine that if the rough periodicity continues over the next few decades, there's probably going to be another peak sometime in the late 2030s, which means that as we think about the next trough, it's likely going to be somewhere unscientifically between 2024 and 2032. Which means that the founders of 2024 to 2032 will change the world. We can't wait to meet them. And our sincere hope is that we'll have a bit more than our fair share of them right here at home in Southeast Asia. Nancy, thank you so much.
Personally, I can't wait to meet the class of 2024 to 2032. Although it does make me feel a bit old. And based on what we've talked about today, I think there's objectively a very good chance that many of them will be based in Southeast Asia. With that, we'll bring our data documentary to a close. If any of these ideas resonated with you, please do reach out to any of us. We'd love your feedback. Thank you for your time and have a happy and healthy 2023.